It's the bookie to replace all bookies. I really think Polymarket is, just as a platform, holy cow, they're going to make a killing in the next, from however long they've been around to the next 10 years. Quite a genius application.
It's interesting what you say there, Mark. As a degenerate, as a bettor, as a gambler, someone who has used it all, there was always this idea of this peer-to-peer betting market that could allow you to kind of create your own odds. So if one side in this is getting a majority of the bets, the price will become more expensive for that bet, meaning that the other side will become less expensive. So there's actually more room to have alpha on a market like this rather than what Vegas provides you. Hello, everyone. It is October 17th in the afternoon. Very exciting news. We have finally come up with a name for this podcast. This is user Extractable Value presented by the Advantage Blockchain team. Welcome.
Finally. Let's go. I'm feeling Migglish today. Very Migglish.
Let's go. Migglish.
What's on the books? What's on the agenda for the research today? I see Bitcoin nearing all-time highs. I never thought I'd see it.
Bitcoin is nearing all-time highs. It is extremely exciting. I think that the point here is very anecdotal, but outside of the participants that we speak to on a daily basis in the market, I would say that sentiment is, I don't even know what it is, but people think that the industry is dead and people think that the industry is not as hot as it is. We've seen insane growth over this year. If you look at the 2023 leading up to where we are in 2024, that is insane growth. It looks to me like almost 3x, if not more. So while people are down on the industry, and I saw a video the other day saying that the industry was dead and where are the crypto people now? And meanwhile, we're over here nearing all-time highs and gearing up for this insane bull run. So.
Yeah, what's interesting? Bitcoin is almost at all-time highs, but what about Ethereum? And what about a lot of these other coins? They're only what, about halfway the way there? What does that mean? Is Bitcoin overvalued, or is everything else undervalued, or somewhere in between?
Yeah, I think typically you see Bitcoin move first, especially in the beginning of a bull cycle. I feel like Bitcoin oftentimes can go for a run first, but that just gets all the other coins moving too. So I think ETH is going to catch up. Now, I know we have the ETH and BTC chart next up, and I think that's a good one to look at to really see the ratio, right? You see it's down now because Bitcoin's having its initial run. But you can see in the past, it goes up, it goes down. A lot of times it'll bounce back really hard.
Yeah, this is a super important chart for, honestly, everyone in the industry. Whether you're bullish Bitcoin, bullish ETH, or bullish Solana or every other altcoin, you got to watch this chart, right? Understanding the Bitcoin dominance, which is how much market share Bitcoin has over the entire other crypto market, is important, and this is directly relative to ETH, right? We are predominantly trading ETH with our fund. We still love Bitcoin. We love a lot of the pure coins, but at the end of the day, we're following the money. We are trying to, hold the assets that are going to outperform the rest of the market. So it's really important to watch this. And honestly, these levels we're seeing, once we broke below 0.04, that is somewhat bearish for ETH. We will see if we can reverse, which I am betting that we will. I think we're actually hitting the bottom. I think a lot of smart people think that we are hitting the bottom right now. We'll see. Of course, we could always go lower. There could always be some black swan event before the end of the year. I think our time frame is really, we are at the end of the tunnel. We can see the light. We're at the end of this previous bear market cycle, and many people think that we're already in the bull market. I think that we are potentially at the very beginning of it, but we have really seen nothing yet, in my opinion. I think that it's going to take about 1 to 3 months to really start popping off and seeing some green everywhere. and it's an exciting time. Of course, none of this information and everything that you're seeing today is going to be investment advice. We're just trying to educate everyone, help people, give people the tools to understand this market a lot more.
Yeah, I think one thing to add in here is that the ETH Bitcoin ratio, I mean, we've talked about it getting decimated, but when you look at it on like a weekly basis, there hasn't been more than 2 weeks of positive increase in ETH since May of 2023. That's almost 18 months ago. It's been pretty painful as someone who owns a lot of ETH and not that much Bitcoin. But like you guys said, at the most bull markets, the second half are led by ETH, and we haven't really seen Ethereum with all of its new, let's say, upgrades, 1559, 4844. We haven't seen kind of the reflexivity in Ethereum, in the Ethereum ecosystem that we saw in 2021. And I think we start to see that over the next few months. So it's pretty exciting.
Yeah, and with Ether or the Ethereum network being used at all-time highs in terms of just amount of wallets that are being used, amount of daily active users, plus all the L2s that are being used, like what we've seen with Base in the past, however long, and I know we'll get to that, but it's really exciting in Ethereum and just all the projects that are building on it, what Visa's built, which we covered on the last podcast, what some of the other banks are building on Ethereum, extremely exciting.
It's almost like the fundamentals don't line up. It's almost like Ethereum's undervalued. That's a crazy idea.
So next up, we have here a special article from AB. I know that we're talking about Microstrategy here. Who's buying all this Bitcoin? Well, one of your answers is right here.
Microstrategy. Giga Sailor.
Yeah. I mean, just to recap, we put out this piece this morning.
Great read.
MicroStrategy is a pretty interesting trade where it's similar to what GBTC was, where there's a premium and then you try to kind of milk that premium. But we view that MicroStrategy will be known as the Bitcoin bank in 5 to 10 years. They'll start lending out their Bitcoin, doing a lot with it. Just right now, they're really in accumulation phase as they have such a premium on the stock to their underlying Bitcoin holdings.
Yeah, and just for the story on this is amazing. And so Michael Saylor had conviction and covered very well in this article on how he started buying Bitcoin. And I think, what does it say? He started buying it at a price of like 11,000 or 17,000. It's somewhere in this article, but he started buying and he never stopped. And the story is how he's using convertible debt into equity to raise, money, like the cheapest money that you could possibly think of. So he's raising it with interest rates of sometimes, 50 or 0.5%, 0.25%, and using it to just buy up Bitcoin. And one of the things that you cover in here, Monty, is really around the flywheel of being able to take the debt, buy Bitcoin when the price goes up, as it has, being able to use a lot of their Bitcoin to actually loan out for more expensive debt, creating this insane money glitch is what you refer to it as. And I know the industry has referred to that a little bit as the
infinite money glitch.
Yeah, so it's truly remarkable what the conviction this guy has.
Yeah, just to put some kind of tangible numbers of how we see maybe the MicroStrategy story developing over the next few years. Right now, they have about $17 billion in Bitcoin. That will grow, that will increase. Whether they buy more, the actual value of the underlying holdings go up. But we did the math, and if they lend out that Bitcoin, a portion of it, even at the 10-year treasury rate, which is about 400 basis points right now, they can generate between $500 to $1 billion, $500 million to $1 billion of cash flows on their Bitcoin moving forward. I don't think the market's pricing this in. I think it's a really hard story to understand if you're not deep in the weeds, but we like this play. Go Michael Saylor.
Yeah. Would you suggest buying Bitcoin itself or holding MicroStrategy?
Well, we don't
Bitcoin.
give investment advice, but we could talk about what we do ourselves. And in that case, you said you would prefer to hold Bitcoin, Monty?
Yeah, personally. Moving on, enough showing our own writing. It's a great piece. Subscribe, enjoy. We release pieces at least every 2 weeks. It might be once a week. We like to really get our brand out there.
Awesome. Well, here we have some of the presidential election odds on Polymarket. Now, Polymarket's growing really fast. It seems to be a crypto app that's kind of broken through into the mainstream. A lot of people talk about it, and the odds are pretty clear here what Polymarket thinks.
It's the bookie to replace all bookies. I really think Polymarket is, just as a platform, holy cow, they're going to make a killing in the next, from however long they've been around to the next 10 years. It's really quite a genius application. I don't follow the politics too much. I didn't even realize we were having an election this year. What's going on? I think some of you guys are having making a lot of bets over here, right? There's definitely some alpha if you can predict the future. I stay in my lane. I think I can predict the future fairly well in terms of the crypto market, but when it comes to I've gotten wrecked on Polymarket, so to each their own.
It's cool. It's interesting what you say there, Mark. As a degenerate, as a bettor, as a gambler, someone who has used it all, there was always this idea of this peer-to-peer betting market that could allow you to kind of create your own odds against really any trade that you can think of. Obviously, when people think about betting, they mostly think of sports. I really like the sports that they have available here. I like that the markets are growing. Originally, when Mark presented this as the bookie to end all bookies, or whatever you refer to it as, I thought maybe, but more so on the futures side, this really acts as a futures play where you can bet on things like who's going to win the Super Bowl, as we're seeing, rather than head-to-head games. But they've actually recently added head-to-head markets, which are really cool. It's interesting because it actually, if you're a bettor, there's probably a lot more alpha to be found on here for a head-to-head, because what happens is when Vegas puts out lines, usually one side will get a majority of the bets. So if one side in this is getting a majority of the bets, the price will become more expensive for that bet, meaning that the other side will become less expensive. So there's actually more room to have alpha on a market like this rather than what Vegas provides you, because Vegas is always going to be providing the best possible line based off of the given information they have. They're not going to change the line as much based on which side is receiving the most bets, despite what most people think. And that is how most people think Vegas works. That is not necessarily true. I'm glad you brought up this market, because this is an awesome market that I think people should be watching. Just a little alpha. Ashton Jeanty is having the greatest season for a running back in college football since Barry Sanders. And what's really interesting about this is obviously Ashton Jeanty is the favorite, but he still has a lot of room to grow as a multiple. It would be a 2x multiple if he won, or a 3x. I don't know the exact math, but I did a little digging today as a sports guy, and I think if you wait 2 weeks to take Ashton Jeanty, he has a bye week, and then he has he's playing against a very good run defense in UNLV, and then he has 5 more games after that against very bad run defenses. So if you can wait 2 weeks to let Ashton Jeanty drop to around that 27% level, I think that is the ultimate play, because I don't see how the guy is averaging 200 rush yards a game and 3 touchdowns a game doesn't win the Heisman this year.
Gotcha. So do you think that, Beckman, you're somewhat of a sports bettor? I've known you my whole life, and you're quite good at it, actually. You're very disciplined. Most people are just degenerates. They bet on what they like. Do you think that, and of course, you look at DraftKings, you look at all these venues, they've blown up in the past couple of years since it's become a lot more legal. Do you think that the people who are taking sports betting very, very seriously are going to migrate to a platform like this because there's somewhat better odds and better squeeze, or the opposite? Do you think that because this market is so efficient, it's providing less of a way for them to make better bets?
I think this is the best place that sports bettors can find bets. The markets aren't as deep as DraftKings or FanDuel. what you can find on DraftKings and FanDuel is outrageous. There are not nearly as many markets here yet. That being said, if you're looking for simple bets, like who is going to win the Heisman or who is going to win the Super Bowl, you will find the best odds here if you are looking at it from a sharp way. And what I mean by that is if you are looking at various factors, if you're researching your bets, not just doing, I think this team is going to beat this team.
Intellectually sharp, you mean?
Yeah. If you're running a system, if you're doing something, this is where you'd find the best odds, I would think.
Got it. Understood. Polymarket. Check them out. Great on-chain product. This is an amazing UEV tool. We're trying to give the users extractable value.
The last thing I'll say about this is you don't have to hit a bet either. You can sell it. So if you place a bet on here and the percentage goes up of its likeliness, just like how you can cash out on DraftKings or FanDuel, you can sell it to someone else who can actually buy your bet. So you don't have to wait for the bet to finish for you to actually make money off of it. So if you can predict.
To recap that, I think it's best to say that you don't have to be right about the outcome. You just have to be right that the odds are mispriced.
Correct.
Cool. Polymarket's awesome. Great app. A lot of new bets coming on there. So let's go next to the A16Z Crypto, State of Crypto. This is always a great report by a great firm in crypto. So let's talk about it.
Yeah, I think these guys make the most beautiful reports. I mean, as a full-time researcher and part-time aspiring graphic designer, it's like a lot of the times research is quite boring. They've got really incredible visuals and the way they tie it all together. I mean, it's one thing to have good research, right? That's already hard enough. But then making it actually, delightful to look at. Big shouts to A16Z. They're crushing it. I actually haven't even fully deep dived into this. I think it just dropped this week. I'd love to hear whatever takeaways you guys have. I've seen some overviews, but I'm sure there's a lot of really insightful stuff in here.
Yeah, I guess I can hop in here. There's two main things I really took away from this. One, everyone loves to compare crypto to the internet adoption. I like that as well. I don't know if active addresses is the best metric. I don't know a better one right now, but I just know that it can be gamed. Just because something's an active address doesn't mean it's not like a bot or someone else. But then something else that I think just shows another product market fit is it's a stablecoin adoption somewhere. Oh, it's right here. So we had a bear market from crypto from, let's say, 2022 to 2023 or so. You can really see that in the volume here. But the stablecoin adoption never slowed down. This is a clear product market fit. This is really, in my mind, the best use case of crypto right now. Even if everything else fails, the ability to send money anywhere in the world it's a game-changing technology. And so it's important to maybe stay away from the price with certain stuff because price can change rapidly and look at more of the underlying trends. And that's what we try to do here at AB.
Yeah, I also think it's interesting to see a lot of the top active addresses are L2s. And I know we're going to talk more about L2s later, but I noticed that it seems like L2s are accounting for a lot of the growth, and we'll talk more about that in a bit. So
I think that figure too that you mentioned about the addresses hitting an all-time high, right? That's why Base, if you listen to Brian Armstrong and Jesse Pollack, Coinbase and Base founders, they're talking about revenue generating contracts, right? We actually have a special piece coming out on that, where we're doing research on it, conducting essentially what the whole market should be paying attention to, what the biggest fish and the whales are paying attention to is more important than just addresses. It's contracts that are generating revenue. So we do the job of listening to these whales and stalking the developers and finding out what they pay attention to. We're trying to amplify that and bring it to the whole world and let you guys know what to pay attention to as well. So keep an eye out for revenue generating contracts. That's a really important metric.
So next up we have an L2, actually a new L2 that a lot of people have been talking about. And I know there's some interesting tech behind this as well. So I think next up we have the new chain by Uniswap.
The Unichain. Have you heard about this? Have you seen this? It's
Yeah, this is the latest chain that's part of really the OP super chain. I was honestly a little surprised by this chain. It makes sense in some aspects. I just don't know the technical details of how you combine all the liquidity across the chains. But like this is, I think, the natural evolution, because especially with L2s, that they're so customizable that there's certain things that might make sense on one L2 for Uniswap that don't make sense on kind of a general purpose L2. One example of this is really the trusted execution environments that Unichain's on the forefront of. So what is this? Trusted execution environments allow the confirmation time to be sped up. So right now with Ethereum, the blocks are produced every 12 seconds. The goal with kind of a trusted execution environment on Unichain is to make it 250 milliseconds of confirmation and finality. There's a lot of tech that goes into this. Right now, trusted execution environments are only require a physical aspect of it. And I'm pretty sure it's Samsung and Intel are the only two companies that build the hardware that's required for this. But this is on the forefront. This is the deep technical math problems that crypto is solving. So there are meme coins, but there's also stuff like this that is really changing the game, in our opinion.
I have two questions on this. First question is, how does an L2 like Unichain, just like Base, which is built on the OP super stack, is that the correct way to say that?
The super chain, but it also is a super stack.
Super chain. So how does this impact Optimism, which is a holding of an Advantage blockchain?
Yeah, so I think first off, shouts out to Optimism and the OP DAO. We're strong delegates. There's standards, right? Optimism is providing the standard of technology, and Bankless did a great podcast with both Carl Flourish, one of the founders of OP, and Hayden Adams, who's the founder of Uniswap. Definitely highly recommend checking that out for just an overview. I haven't fully deep dived into these documents, but what they were speaking about is, and what Optimism does is provide the standard, right, of their protocol for anyone who wants to build on it, right? And in return, we saw with Base offering their kind of first standard, which is, I think, going to be roughly 15%, I think it's something like 15% of the revenue generated is going to Optimism, right? It might be 15% or 2.5%. I know there was two numbers.
I have it here. It's the greater of.
Right, the greater of 15% of the whole network, or 2.5% of what?
Well, it's 50% of revenue or 2.5% of profit, whatever one's higher.
Right.
I think at this point, I think 15% of revenue is probably higher than 2.5% of profit, because the profit margins are so high on the chain. They're like 80, 90%, but yeah.
Exactly. So that's a really important figure. And I think what they're trying to also push is like, hey, Optimism, the super chain, we're providing these standards of excellence for everyone else to use. So, the in turn standard of us receiving would be, you guys give us a cut of basically your network, right? They're not forcing anyone to do that, right? Because this is all open source technology and whatnot. But essentially, there's likely going to be a big fee share from Unichain going to Optimism, the collective and the DAO, which is going to help, further push the OP ecosystem further, which is, ultimately long-term bullish. Now, I think I still have to deep dive on these actual documents on the Unichain. I do think it's actually interesting. My first genuine, honest opinion from hearing about it was, kind of interesting, almost like you were saying, Monty. It's like, I don't know if there's a need for Unichain to really make their own L2, or for Uniswap to make their own L2. I'm sure I'm missing, several large-scale technical factors that, we'll pick up from reading this. And sometimes you read these things and you still don't pick up on it for another year. But I mean, genuinely, I'm pretty bullish on Arrow and Aerodrome being the liquidity hub. And I think that, honestly, Uniswap sees that they're actually starting to gain some real big competition, and they're trying to keep up. I mean, at this point, Uniswap has, obviously established themselves as a great prominent figure in the DEX landscape. I mean, they're the biggest and the best, but that's not going to be forever. And I think they've got a lot of capital to try and compete. So, I don't want to say that this is just them trying to keep up. I'm sure there's going to be lots of really interesting innovation that comes with this, but just first opinion, it's not at least as immediately clear to me, what is the big why for that they're doing this.
Well, I think with this, you basically have to look at the fact that Uniswap is one of the most popular DEXs, if not the most popular, on all of these L2 chains. So I'm assuming that they're going to use Unichain as a way to route orders between multiple different chains which they're active on, right? Because certain things that make sense. Let's say if it's WETH, right? Or let's say if it's a token that's available on different chains. But certainly for stuff like WETH or other assets that are really like cross-chain, there might be a way to do it. But I don't know. It sounds interesting to me. But I agree,
sense.
we have to see how it's going to fit into the market. So next, I think you wanted to talk
Yeah,
about...
just one more topic on this real quick. I think the reason they're launching this, I don't know if it's from a position of strength or weakness, but I think everyone's just looking at how profitable L2s are on chain. And we know Uniswap's had that fee switch kind of issue. It's super popular without generating a lot of return for uni token holders. So I wonder if this is their attempt to kind of generate more fees, similar to how Base is printing money right now as well.
So very simply, if I'm understanding this correctly, back to my question, Optimism created a layer 2 scaling solution to make using Ethereum more efficient. And by doing that, they created a standard that other networks can create their own layer 2s or their own scaling solutions that are more specific for various use cases that could use the scaling solution.
Yeah, think of it as the superchain is the United States, right?
Yeah.
So there's federal laws. There's federal laws, but for example, Unichain might be California, and then Base might be Texas. And within California and Texas, there's different laws, but the federal laws supersede the state laws. And so that's kind of how the chain is being built out, in my opinion.
Right. And as Optimism, the nation standard upgrades and implement solutions, they can push that through the super chain, right? So then the Unichain will see those benefits, Base will see those benefits, Sonium will see those benefits to all the gamers on PS7, but then still, if they want to have their own individual differences, they can. And I heard for the first time that sort of, United States super chain comparison. I think it's a great analogy. I think some other great analogies are being made in this X post here with Blackrock going on. What's going on there? I guess that's my territory, huh? So if you guys have heard of Blackrock, honestly, before I got into this investing stuff, I didn't really know about them. Have you seen that Venn diagram where it's like Blackrock, Blackstone, Black Group, never mind. Anyways, I'll tell that one later. So BlackRock is the world's largest asset manager. They now manage 11 trillion. If you want to scroll up to the top of this, so they just dropped their Q3 2024 earnings call, which is, in my opinion, we called this. It's the world's biggest investment call because it really is, right? These guys are managing, a large portion of the money in the entire world, and things that they do, the rest of the world follows, right? So, imagine being a fly on the wall inside their earnings call with all of their directors and whatnot. So that's what we did, and it's actually crazy. You see the news break when Larry Fink, the CEO, mentions Ethereum and says some bullish things. Everyone's tweeting about it, and everyone posts it the next day immediately, of course. But then when you go to the actual earnings call, these things have like a few hundred views, right? It's like you would think that more people are actually paying attention to this, but they're not. So, we posted a somewhat in-depth thread with a few direct quotes that are, kind of, some of them are mind-blowing, and really it's just incredible to see. It's very, very validating, especially if you've been in this industry as long as we have, for the past 8 years. deep diving all this stuff, right? It's like a lot of it is validating in things that we already believed, but to hear the world's largest asset manager say them means like, holy guacamole, this stuff is really about to pop off. So, I mean, I can talk about a couple of the things. If you scroll back up to the top, I mean, you guys can read this for yourselves, but, really, I guess, scroll down a little bit more. They talk about perpetual capital, right? Well, I mean, that's another way of saying infinite money, but they talk about BlackRock is perpetual capital. They talk about how they're doing that through their indexes, which is, their ETFs and whatnot, right? And, what are the two newest ETFs that they've launched? Well, the two biggest new ones are Bitcoin and ETH, which have performed better than most ETFs ever have in the history of ETFs. And then they go on to talk about how, countries worldwide are recognizing the power of these American capital markets, right? And they want to build their own. They see great opportunities, obviously, across technology, rewiring, globalization, and unprecedented need for new infrastructure. This is a direct quote. Larry Fink says, rewiring of globalization. Like, can we think of any technology that would help the world rewire how capital markets work? I mean, does anyone have any ideas like what that could be?
Ripple.
Yeah, XRP is a good one for sure. Dash, Litecoin.
Algorand.
Yeah.
Aerodrome.
Yeah, so
Mr. Miggles.
Yeah, Miggles. I'm feeling very Migglish about BlackRock being openly bullish on Ethereum. So, time will tell. Like we said in the last UEV update, the big money moves very quietly. They drop an earnings call. You'll see a couple tweets, but no one really listens to the whole thing. And if you do listen to the whole thing, then you'll know the alpha ahead of everyone else. That's what we do.
So I think next up we have some more adoption by big banks here to talk about. So this is Deutsche Bank. What are they doing here, Monty?
I can take this one. Yeah, so Deutsche Bank, huge bank out of Germany, they partnered up with Keyrock, which will allow them to expand their cryptocurrency operations and FX operations, which is really exciting because they're just more deeply integrating into the digital asset space. Funny enough, they're Ripple backed. I know I was laughing when you guys said XRP on that last one. But what it's doing is a lot within cross-border payments, a lot within FX investing. So I think what we're seeing here, and I think the big takeaway is Deutsche Bank, an absolutely behemoth institutional grade bank managing trillions of dollars, is now expanding their crypto services and expanding other services using blockchain, which is very exciting for our positioning, investing in blockchain infrastructure and really betting on blockchain integration as a whole through these investors and institutions.
Yeah, it seems like banks around the world are adopting crypto and blockchain at an increasing rate, and that excludes the U.S. because the SEC is just a crapshoot right now. But hopefully that changes, and U.S. banks kind of lead this adoption versus kind of lagging behind everyone else.
Yeah, genuine shouts out to Deutsche Bank. It was them being on the brink of collapse in 2016 that really took me down my first rabbit hole of understanding why crypto was going to work. So shouts out to them. I hope they're doing a little bit better. Let's talk about Greyscale, I guess.
Perfect. So simply, Greyscale is looking to turn their multi-token fund into an ETF consisting of Bitcoin, Ethereum, XRP, Solana, and Avalanche.
Who is Greyscale, by the way?
So I don't know if someone else wants to take this, but
yeah, I can hop in here. Grayscale is an asset manager that launched the first kind of Bitcoin trust, and they're just before BlackRock got into the space. They're probably number 2 now, but they're just one of the biggest asset managers in crypto.
How did Avalanche shill their way into there?
I mean, Avalanche, and this might be a tangent real quick, but Off the Grid is blowing up. It's the first kind of crypto game that seems like it has product market fit. You see all the big streamers playing on it. It's interesting how different blockchains are developing into their own niches, and it feels like Avalanche dived pretty heavy into the gaming niche. And we'll see if that like works out over the next 12 to 18 months. But
Avalanche
kudos to them.
Avalanche also is heavy into the RWA space. So they have actually a fund called the Blizzard Fund. It might even be a whole team over there, but it's dedicated to getting a lot of real world assets on chain. So it's really interesting. You'll see a lot of the biggest RWAs that have been issued. They'll be on like Ethereum. They'll be on like some big chains, and then you'll see they'll also be on Avalanche. And so they've done a really good job of integrating into that space. They have a really good team over there that I've met, and it does seem like gaming and RWAs are their focal points.
Dope. All right, our favorite L2.
I think Base is our favorite L2. Well, I have to say that Optimism is my favorite L2 because I've been with them since Plasma, since Omise Go. But
I know you're a Federalist.
Wait. I'm huge on Base. What is this beautiful graphic we have here?
Yeah, I think more so than just one graphic. That was one. Here's a more from DeFi Llama, one of our favorite websites. Just showing exponential growth, hockey stick up to the right. I mean, if you look at the 1 month change in all these protocols, like that's fucking impressive. 80%, 30%, 40%, 30%, like the top protocols are just crushing it on Base. And this is how we get adoption. I mean, a good question to ask is technology more important or is business development more important? Base might not have the best technology, but they have the Coinbase funnel, and I think that's undefeated. I'm interested to kind of hear your guys' perspective on that, on kind of what matters more.
Versus what matters more between what two things?
Like having the best technology or having kind of the best business development. I mean, we just talked about Avalanche having great business development with real world assets and gaming, Base obviously. Well, just kind of your.
I think Solana has great business development. Clearly, they have a lot of big sponsors. They got motion, as Kai Cenat would say. I think ultimately, it's like a two paradigm world, right? It's like fundamentals and technicals. It's like content and marketing. It's reality and perception. And I think that both of them are extremely important. I think that genuinely, if you max out one or the other, then I think you can see success. But ultimately, the best, what's going to succeed is the one that has both, right? And I think that is closer to Base, right? Which is Base has the genuine, in our opinion, the best technology, right? Which is Optimism. Long before Base, we decided Optimism was going to be the best L2 just from understanding all the technology and how it works. I mean, you look at Coinbase, they've got a lot of money to pay the best devs anyways. I mean, we listen to Jesse Pollak a lot. It's like they've assembled a team of probably the best blockchain devs in the world. And then business development wise, I mean, yeah, they've got that too. Having Coinbase behind them is insane. So I think they're going to succeed there. I think, it's tough. It's like the analogy of the light bulb and the silly bands and the iPhone, right? Of which I say when I talk about this, you guys haven't heard this one. I'll put you on game. So when I talk about content versus marketing, right? Okay, you think of content. What is something that's pure content? It's a light bulb, right? I bet none of you guys can name the brand of your light bulb that are in your house, but you buy a light bulb because you need it. Right. Okay. Well, maybe if you're Savant, then you probably know your light bulb company, but you probably don't. If you look at something like silly bands, or maybe a new one I can use is Nike. Right. If you see something made by Nike, it's like that's cool. It's recognizable. You could just get a T-shirt that's probably the same exact material, but they have the marketing there that makes it a superior. Is it a superior product? No, it's superior marketing. But then, what's something that has kind of both of those worlds combined? It's like an iPhone, right? Which is, if you take, a supercomputer and put that in your hand, that's an incredible product. It's an incredible piece of content. Then you also take the fact that, you have Steve Jobs in a sick sweater selling it, and everyone that has an iPhone, and you're a weirdo if you text someone with green text. It's like ultimately you really need both to win the monopoly. But I think that you can succeed with only one or the other, but only if you really max it out.
So what I'm gathering, Mark, is have really good business development and have really good technology.
Yeah, ultimately, I'm a content purist, right? I would rather have, if I had to pick one, I'd rather have the best technology over the best business development. I think that will, in the long term, win. But, in terms of a lot of investment things, that is not always the case. So you need both.
All right, moving on. We're talking more about L2s, I believe, and some of these different L2s. Tell me more about this. I'm still trying to learn about these stages.
Yeah, one of our favorite website, L2Beat, really just add transparency as the Ethereum ecosystem develops. A lot of chains will call themselves L2s, but not all L2s are created equal. The best example of this is the different stages that are really standards that are set right now. It's stage 0, 1, 2, 3, and 4, I believe. And it's clear that only two networks, Arbitrum and OP Mainnet, have reached stage 1. I think Vitalik said next year this time we won't consider an L2 and L2 unless it reaches stage 1. So that's an interesting development where it's like social consensus almost. But the most interesting part about this in my mind is that Polygon often brands itself as an L2, right? But none of the L2B, Grow the Pie, any of those websites include it as an L2. So it honestly makes me trust it a little less, regardless of technology. I just don't like the branding of something that they're saying they are something they're not, and that just rubs me the wrong way personally. And this is a good way to verify that L2s are what they say they are.
That's interesting. I have not heard of that until now.
Well, I mean, look, Polygon's not here, but Polygon by TVL should be like right here, right?
So why would they not be considered one? Is it because of the way their infrastructure is set up that it's technically?
Yeah, I believe so, because I'm pretty sure they were their own standalone chain, and then they audibled. I mean, even a whole different website, Grow the Pie, different than L2B, also doesn't have Polygon here.
Maybe they're blackballed. No, that's interesting. I'll look into the actual technicals of that. I didn't.
Yeah, they have ZK EVM, but not the mainnet. Yeah, this is just all about doing your own research, comparing multiple data sources, not taking people at their word. I mean, we know trust but verify, and that's always important.
Exactly. At the end of the day, guys, we don't know everything, but we're trying to give you the tools so that you can know more.
Dope. All right. Well, I bring crypto to real life. I'm a New Yorker. I grew up in New York City. I saw Fred Wilson made this post this morning. Super interesting. Blackbird is, let's say it's a restaurant rewards app. And so we talked about Polymarket really hitting product market fit, really breaking out of kind of the crypto native people. I think Blackbird's doing that as well. And it's just very impressive to see how many different restaurants they have in really Manhattan and New York City to sign up with them. And this is how crypto grows. It's not flashy, but network effects take hold, and this is just straight up impressive in my opinion.
That's a lot of population.
Yeah, these are all individual restaurants that accept it. Like, it's pretty cool.
Wow, that's awesome.
So, all right,
looks like my helium miner map.
Looks like my
great example.
Bitcoin burger map.
Well, now we're in the late stages of the podcast. We have some alpha for you guys over the next few minutes. This is one of our favorite apps right now. You can see two of my positions are farming. Thank God I have no liquidated positions, but well, we can see it here. Extra Finance, they're one of the biggest apps blowing up on Base right now. They automate yield farming. They compound for you every 12 hours. And it's just a great app to use. And if you stick around for this part of the podcast, you should use it as well.
Yeah. What strategies are you deploying on here?
Yeah. So the first one is MSUSD and USDC. Both these are stable coins. They're both supposed to be paid to $1. Basically, through Arrow rewards, they're paying us 21% APR, probably about 24, 25% APY to provide liquidity here. And so what does it do? We're providing liquidity to the underlying pool and Aerodrome. And then every, let's say, few hours, the liquidity gets a reward that's an Arrow based on kind of the gauge each week it changes. But what Extra Finance does is every time we get some Arrow reward, it auto compounds that and basically sells the Arrow and then buys more of the underlying LP token, and it automates that. So it's set and forget. Obviously, you don't just want to like not check on it for a while because bad shit can happen in crypto. We all know that, but it does a lot of the work for you. So these are a stablecoin pool, and then you see Arrow USDC here. Basically, they're giving us almost 55, 60% APR, higher APY to provide liquidity to this pool. AB as a fund is bullish on Arrow. And for our yield strategy, we think if we're getting paid almost 60% to take about a 50% long position in an asset we already like, we'll do that a lot.
Yeah, this is all super simple, totally not complicated at all. My last question would be what is Extrafi? Because I actually haven't used this yet. I'm more of a degenerate speculator and long-term holder, where we've got, of course, other members on our team who are, absolutely, demolishing and doing a great job of getting yield in these different DeFi applications. My question is, what have you seen Extrafi providing or doing a better job at than these other DeFi applications like Aave, Compound, and what else? Is there anything besides just better yield?
Yeah, well, taking a step back, Extra Finance is a layer on top of Aave and Compound and Aerodrome or Velodrome. So I don't know if they're exactly comparable, because basically you deposit money into Extra, and Extra's smart contracts deposits that money into the underlying protocols and auto compounds that for you. The thing that's kind of different about Extra is they allowed you to leverage yield farm. So you can see right here, we don't use leverage with our positions, but if we wanted to, we could lever this up 2x. And we would pay a borrowing cost on the underlying assets, but people like degens can go 3x leverage farming. And if you're doing 3x on USDC Arrow and APR 60% with 3x, like you probably can get close to 100%. And so it's just more capital efficiency, really.
Very cool. Shouts out to Extrafi, great UEV tool.
Yeah, I might have to check it out.
Check it out with Dr. Steve Brule. Steady, lads. I think I watched this. I shouted these guys out. Right? Did I put this in here?
I think so.
This is the Murad. Okay, this makes sense. All right, so if you haven't seen the OG Murad speculation, sorry, Dylan. Murad is people are calling him the Steve Jobs of memes. Yes. Watch this presentation if you haven't already. Obviously, this is blowing up in the crypto realm. So, in my opinion, he said a bunch of things that we've already been thinking, but it goes to show the rest of the world doesn't understand this yet. And honestly, it's a big part about presenting your research too, right? We conduct all this research. We're trying to do this podcast to present more of it to the world, to our audience. But, genuinely, many people might come to the same conclusion, but to go on stage and present it, to an audience and show all of your proof right here in a clean presentation, it's not easy. So, big shouts out to Murad. And it's like, he's shown this presentation providing several fundamental use cases for memes. Essentially, the thesis is that memes fundamentally actually do have utility, and that a lot of them are undervalued. And there's just incredible uses that can come from these sort of hyperactive DAOs. It's almost like an evolution of a decentralized autonomous organization. The traditional DAO trying to be more organized versus these memes are just cults. But it's like a DAO working even faster. I think it's a great talk. I can't recap all of it in just a minute, but he has, in my opinion, really started, maybe even kicked us off, or at least been the cherry on top, the straw that's broken the camel's back in terms of really sending the meme market into motion. And I'm not going to say that we're at the top yet, because I don't think so. I don't even think we're close, but the floodgates are open. And I think the world is now starting to pay attention. I think the world wants to become their own Steve Jobs of their own different memes and cults. And it's certainly a very interesting talk if you have not seen it yet. He then goes on with Steady Lads. I've been following him on all of his talks. He's made several predictions and talked about his bags. Crazy he has not discovered Mr. Miggles yet, or I actually think the conspiracy theorist in me thinks that he's working with Miggles and the Miggles Nation to build up his own hype. And then he's got this whole track record. He came out the gate with a few different coins. They're all pumping like crazy. Everyone's going to be watching him. They're going to say, hey, Murad, what's next? Murad, what's next? And then he's going to point to the beautiful Mr. Miggles. But we could be crazy too, don't.
Yeah. I think one thing to add in here, and like the reason why meme coins are taking off so much, is that he touched upon a great point where a lot of the VC tokens, VCs don't care about the utility of these tokens. The game is they get in at the early stage, they get marked up 10, 50x, 100x, and then they IPO, have initial token listing at super high valuations. And even if the coin dumps 90%, these VCs are still going to dump on you because one, they need to, it's part of their fund's requirements. And two, they're already still, even if it's down 90%, they're still making a killing on it. And so this is part of the issue where if you look at most VC coins, they're down only. Why? Because even if you buy it when it's down 90%, the VCs are still dumping it because they're
up 10x. Yeah, that's facts. That is a new culture.
We're going to talk about some meme coins now. Right?
The best ones.
Oh, Mr. Miggles, what's this? He looks cute. Mr. Miggles are coming in at a cheap price of only 0.0175. 10% of the proceeds go directly towards Advantage Blockchain when you guys buy one of these. No, we're just kidding. They actually don't. I'm pretty sure they actually go to charity, which is such a Giga Chad move by the Miggles team, the Miggles devs. I also found out from listening to some Miggles talks that the founders are like ex-NASA engineers and close Coinbase ties. So you guys know my theory. It's that Coinbase is secretly behind Mr. Miggles. I mean, it's not even that much of a secret. They posted their own direct video on their own public YouTube, the same YouTube that has Super Bowl commercials. I think this thing's crazy undervalued. And this is the NFT to understand, right? They have a collection of NFTs, which was also launched at the same time as the Miggles coin, which is two sort of separate assets that have combined under the one umbrella of just being Mr. Miggles. They're now a combined force. We are more bullish on the coin because I think it's just long-term, could have more utility and more value. That said, we still did sweep the floor for about 50 Miggles NFTs, which only cost about an ETH. For perspective, I think we're maybe about currently maybe 7 or 8% in Mr. Miggles the coin, which is pretty significant. That's not small, right? We're very cautious about entering different altcoins. So for us to be about 8% into something is a big portion. But we believe, and we're trying to flip some biscuits here, and then the NFTs, that's only a small fraction of that. We're much more in belief that the value capture will go to the coin, but who knows? We could be wrong. And at the end of the day, like Murad says, and I think like the culture is pushing towards, who cares about the money? If you like this cat, then you should go buy some and support it. And, I think a lot of people, for whatever it's worth, really are doing that with all these different causes, all these different whatevers. And, it's actually, sometimes it's about owning it. It's like the Bitcoin Neo meme, when am I going to sell my Mr. Miggles? Well, Neo, when the time is right, maybe you won't even have to.
Yeah.
Maybe Starbucks will accept Mr. Miggles. Okay, I think I've lost it.
All right, to wrap this up here, this is probably my favorite NFT collection right now. It's on the smaller side. Miggles had 10,000. Base Gods has 808 or so. We were buying this when did we buy this? Maybe in March or so. I think I scooped a few at like 0.66 or 0.65. Obviously, it dipped down a lot. People were scooping here. Is pretty impressive for everyone that did. Different NFTs have different characteristics, whether it's edition size. There's no creator earnings on this one, but there's creator earnings on the last one. Not all NFTs are equal. That's kind of my main point here. But you have to buy shit you think's cool. Like I love my base god. It's a pretty sick photo. And so that's why I own it. If it makes money, it's dope. If not, that's fine. And I guess my recommendation here to give you some alpha is when you're buying NFTs, always buy at least two so you can flip one if you need to and hold on one forever.
Yeah, I think that is great alpha. And of course, it's important to understand, like, there's a difference when we're investing as a fund versus when we're investing on the personal side. But our fund has never had any NFTs up until Mr. Miggles, which we're extremely bullish on, obviously. But it's like, ultimately, that's a very, very small percent of the fund. And, we view NFTs a lot more like art, right? You should buy them and hold them because you like them. And if you make money, then that's awesome. Versus with a lot of these coins, they're, of course, much more tradable assets. And I think, yeah, it's an incredible space to be in. One last conspiracy theory for you guys. We know that Jesse Pollak, the founder of Base, both owns Miggles and he owns some Base Gods. He was very bullish on Base Gods when they first dropped. We've actually been in direct contact with Base God on Twitter and Warpcast and whatnot. But if you do some digging, I believe that the owner, Monty, you know where I'm going with this?
Yeah.
The owner of Base Gods, is it the owner who has the most Base Gods, or it's just Base Gods.eth? He is the top holder, right? So we've pretty much confirmed that Base Gods, and thank you Base Gods, is like a real Coinbase insider. And the top holder of Mr. Miggles NFTs in general is BaseGod.eth. I think if you go to collected and
just Base Gods, they own 122 out of 807. That's a lot.
Right. There's only 807. So, theoretically, if one person if this is individualized, only 800 people in the world could own a Base God. That's a pretty small, a lot of these collections are around 10,000. That's a much smaller one, making the asset a lot more rare. You guys can do some digging for yourselves. Look, we're probably crazy. Don't go taking out a mortgage on Mr. Miggles. But in a year when we're at $1 billion market cap, definitely come back to this video. We'll probably be pushing it to all your socials and clipping it. That's a pretty cool Base God. I think we'll close it there. Thank you, Base God.
Yeah. I hope you guys enjoyed this edition of User Extractable Value, and I hope we provided some of that for y'all.
Do your own research and never risk more than you're willing to lose. Unless it's at the casino. All right. See you guys.
Thank you.